Welcome back to the ETF Inspector. It's Friday, August 1st, about 4:30 in the afternoon. Markets are closed, the trading week is finished, and this will be our video covering the three Roundhill 0DTE covered call strategies funds, QDTE for the NASDAQ 100, XDTE for the S&P 500, and RDTE for the Russell 2000. Reminder, as always, I'm on X at ETF_Inspector1. First thing in the morning, I post the trades made within these funds. They release them within 15 minutes of performing the trade, so that way you've got all day if you want to trade along with them. Not that is not financial advice, or if you just want to keep track of how things went. All right, we'll jump right into it. Unless you live under a rock and have no service and no radio frequency, you know pretty much everything in the market went down today. So red day, that means one thing for these funds: you're going to win your trades. So we'll start off with QDTE. They sold calls, 359 calls at 23,110, collecting $15.82 premium per share, or 567,000. We take a look, and the NASDAQ 100 closed below 23,000, so well below the 23,110. I probably could have made this video halfway through the day. We knew we weren't going to have to worry about these strikes. So we got to keep all of it. It was a perfect week. They went 5 for 5, got to keep 100% of the premium collected on all 5 days. That's the first time that's happened since I started covering these funds. It's only been about 4 weeks now, I think. So all in all, for the week, they've collected $4 million selling calls. So that's the good thing. The bad thing is if you divide that among the 23,550,000 shares, that's only 17 cents per share. So even on a perfect week, option income wise, they didn't bring in enough to pay the distribution. Now, next week's distribution is not based off of this week's performance. It's actually based off of the week before. So we go ahead and use that information. So we're not using the 17 cents per share collected amount. We're using the 3.5 cents per share collected amount. But that's not the first time, second time. It's every time they have not earned enough in income to pay it out. In previous weeks, though, the market was going up, right? It's been kind of a bull market. Obviously, big picture, it's been a bull market forever. But these last couple of weeks, it's still just been climbing up. So they were able to pay it based off of the value of the fund increasing. So it's okay to take a little out of the share price. But now we've kind of got the opposite. The share price dropped throughout the week. Our QDTE, we'll look at our week. Okay, and we didn't generate enough income. So I think we are going to have a reduced distribution this coming week. By the way, it is Friday, payday. So if you had QDTE on Thursday and you had purchased it Wednesday or sooner, then today is the day you got 23.79 cents per share deposited in your account. If you've got that on drip, then today was a great day to have that money get put to work and buy you new shares at a discounted rate. But so just coming up with an estimate for what they're going to pay out for next week. The IV of the index, NASDAQ 100, did increase this week to 19.4%. That's the 30-day. If anybody knows a good website for the 7-day, I'm struggling to find it consistently. I'd like to start using the 7-day IV of this, since they make the trades on a weekly basis and then pay it out. I'd like to do it with my Ulti videos as well. But so I took the average of the last or the last month, and it was 23.76. Basically on par with what they just paid. But then I took the market downturn that we just saw, along with the decrease in the fund, along with not making enough. I came up with a guesstimate of 22 cents. Oh, and I also looked. I went through their distributions, and I went further back than just this recent amount. I went ahead and took a look at when the fund was as low as it is now, right? Sometime back in late June, I took a look at the NASDAQ 100 to see, and it was around this price. I kind of take all that into consideration. Take a look at what they were paying back then. Realistically, I might even want to lower it. I'm gonna go 21.5 cents. All right, I'm done messing with it. I actually changed it like 3 times before I clicked the record button, and I'm still changing it. So I'm gonna leave it alone there. I'm guessing 21.5 cents based on all the information that we have. One thing that would lead to it being a little higher is that the IV of the underlying is increasing. That comes into account too, but every other factor kind of leads us towards thinking it's going to be lower. So I'm going to go with a lower guess. There was no changes in the holdings from yesterday to today. Decreases in values of our long calls because the NASDAQ was down yesterday. It's going to be pretty rough decreases when we download the next one, but we won't have that information. We won't have a video till Monday. You got a weekend, so don't have to worry about it. 830 million assets under management, still 23,550,000 outstanding shares. The NAV as of market open this morning was 35.31, but obviously the market dropped by 2%, so we would expect about 70 cents to come off of that, which will put us right in line or really close with the closing price. All right, we will find out on Wednesday, August 6th, what the next payment will be. Next, XDTE for the S&P 500. They sold calls at 63.10, 646 of them, collecting almost $4 per share or 257,000. Not that we even really have to look. S&P closed at 62.38, well below the 63.10. Doesn't cost any money to settle, and we got to keep the full amount. So again, 5 for 5, kept 100% of the premiums collected throughout the week. And again, so we brought in $1.6 million in income, but when we divide it out among the shares, again, it's not even enough to pay the distribution they've been paying lately. So it's a plus because it's a whole lot better than they've been doing. They lost money last week, but I'm not sure what change needs to be made or what the plan is, because you can't plan for better than a perfect week. So now, I mean, do they need to start selling closer to the money, which when you do that and you have a bad day, you end up paying so much to close it out that it blows your whole week. So glad the decision's not on me to make. I just report out the information. So we take a look at the fund, but again, we're not making the distribution next week is not based off of this week's trading. It's actually the trading week before where they lost 119,000. So with negative income, that one doesn't even get used. We throw it out. I took the average of the last month, and it was 25.4, basically right in line with what they just paid last time. The IV of the S&P did go up. Obviously, everything after today is going to have an increased IV. And then, similar to the last one, I went through and looked at the history. That's not what I wanted to do. To find the last time the S&P was down around here and find the last time XDTE was around this price. I went to there on their distributions. And we started getting, we had some as low as 19. So 19s, 20s, 22s. Took all that into account. And again, I don't feel real comfortable with how high I have that. I'm going to bring this one down as well. I'm going to come down to 23. I'd rather guess too low than too high. And even with that 23, I still feel possibly high. I don't know. I think it'll be higher than 23, but There's 408 million assets under management. Again, 5 days till next Wednesday, August 6th, when they will declare. 9,285,000 shares. The NAV this morning before markets opened was $44.04. Lost about 1.5%. So that would be about 60 cents. So it's roughly in line with that. It's like 70 cents off. No changes. We didn't add or take away from any of the synthetics. I'm calling them synthetics. These are just deep in the money calls that are purchased. They're long calls, and that's what we are using to sell our short calls off of. All right. I forgot to mention that. Let's take a look. So these usually take a little while to settle out. QDTE and the NASDAQ 100 almost lost the same amount. QDTE just a fraction more. S&P and XDTE similar. They're within 1/100%. And the only one that actually did any small amount better was RDTE. Outperformed the Russell by still not much, 0.14%, 0.14%. So that's all our information as far as XDTE is concerned. So I think we should definitely be counting on lower than recent distributions coming up next week. Last one, RDTE. They sold calls expiring today for 2,190 on the Russell 2000. It closed at 2,166, well below the 2,190. They got to keep the full $2.94 per share premium, multiplied by 634 contracts, 186,000. And yet again, 5 for 5 on the week. Didn't have to pay a single penny to close out any of the calls. They won every single intraday trade. So if you traded along with these guys this week, congratulations, you won all your trades. If you traded along with them in previous weeks, sorry about your loss. But so the Russell 2000 RDTE is the only one that had a good enough week to fully pay and then some the distribution. So not this coming week, but the next week, I will be counting on a pretty good distribution from RDTE. They basically made 32 cents per share. Now, our estimate is based off of the week before, though, where they lost money, 63,000. So with our income being negative, that throws out that portion of the guesstimate. The 30-day IV of the Russell 2000 increased as well, 24.7%. So that's one thing that would help push it up, but everything else pushes it down. The decrease, I actually realized I forgot to punch this one in. For some reason, Excel recognizes SPX and NDX, but it doesn't recognize RUT. So 2166.78. And 2.03%. And as you can see, like I said, Excel usually takes a while for these funds to finish out. So you can see Excel still thinks the price is at 32. Well, that of course make me look stupid. Let's see if the other ones are right. Yeah, see, XDTE on Excel compared to on the finance app are still a couple cents off from each other, and we don't care. All right, so declaring on the 5th, 28.879 cents per share got deposited in your account today if you had the Russell covered fund. I forgot to mention it. It was 25.4 cents you got if you had XDTE. There's 138 million assets under management. So this one, although it pays the highest percentage, it has the lowest popularity so far. There's not as many people in it. And to be fair, a whole lot more people have heard of the NASDAQ and the S&P than have heard of the Russell. So it is what it is. There's 4,160,000 outstanding shares. 33.37 was the NAV prior to the market tanking this morning. So when you take close to 2% off of that, they'll be close. Once I download the holdings tomorrow and everything is settled and there's no market movement on a day off, I'll update everything, and they'll pretty much even out within a couple cents. But back to this. So our average for the last month is right around 28 cents. I don't think they're paying it. Like I said, over the past week, RDTE lost a lot. So they're not, if they paid a 28, almost 29 cent dividend back when they were $34 to $35, they're not going to pay a 28, 29 cent dividend when they're $32. So that's first part. Russell 2000 had a week. So then we got to go to when's the last time these indexes and funds were in these price ranges. And that's where we scrolled back through distributions to take a look, just to help us, right? Because that doesn't always mean everything, but it's just all things that play into the decision. It was kind of in that May time frame. We had some low 20s in there. And so taking all that information, things moving down, I guess 24. And I think I'm going to leave that one. Hopefully it's not too much lower than that if it is lower. But all right, that's everything. So you can see all three funds, income-wise, did well this week. So next week we should have decent distributions. But if the fund prices don't recover, then I doubt that they're going to go back to paying the average, which would turn into much higher annualized yields. So they're probably going to decrease to kind of still stay in that 30, 35, 40% range. As you can see, this distribution now makes this like a 45% because this is being divided by our RDTE. So as RDTE shrinks, that's going to increase that percentage. So they didn't pay a 45% yield this last payment. It just looks like that now that RDTE shrunk. I think it was more like 40. But okay, I'm just rambling. So enjoy your weekend, and catch you on the next video for these Monday. I still have more to come if you follow my other videos. ULTI and LFGY will have a Friday video recapping the day. Then we will have a Sunday week look ahead and payment guesstimate for that. That's always the most popular video. On Saturdays, I do my personal trades for the week, everything I did. And then I also do the monthly funds for Yield Max. I cover 7 of them that are not the top 7 because Retire on Dividends covers a lot of those. So I just took the next 7. But all right, thank you and have a good weekend.